it's important to understand what the average renter is going through in the United States, right? It's still very expensive to buy a house in many markets. Interest rates are high. The millennials, they'd rather rent. They want the flexibility. So this is all driving demand for apartments, which is really exciting as an apartment investor. We are still short over 4 million housing units in the United States. So there's still quite a bit of an imbalance between demand and supply, which is also favorable as a real estate investor.
Welcome to the Secrets to Abundant Living podcast. Your guide on this journey is Amy Sylvis. If you're ready for the secrets to an abundant life, hit that subscribe button now, and let's get started.
Secrets to Abundant Living podcast community. Welcome, welcome. This is your host, Amy Sylvis, and I'm so excited to welcome you back to another solo episode. Feels like it's been a while. I know it hasn't been, but it feels like it has. There's so many great things going on. I hope life is great for you. Husband Joel and I just got back to the kickoff to the USC football season on Friday, which was so much fun. It's an event on campus called Salute to Troy, where we get to meet a lot of the football players, the coaches, reconnect with other friends who are alums, and really just get excited for the season. So if you're also a college football fan, you know what I'm talking about. It's just, I think of the Christmas song, "It's the most wonderful time of the year." It's really, really exciting. And we had the opportunity to meet our starting quarterback, Miller Moss, who has big shoes to fill, right? With Caleb Williams, who it was drafted by the Chicago NFL team, the Bears. So yeah, it's going to be an exciting season. We're actually heading off to Las Vegas next weekend for our season opener against LSU. So it's going to be a big one. It's going to be a fun one. One of my favorite comedians that I'm a fan of, who I also listen to his podcast, Theo Vaughn, will be there. So you know it's cool if Theo's going to be there. Anyway, I just wanted to let you know what's going on in our lives. Football season is kicking off. And so is investing season. I've got a lot of great updates for you all. As you know, at this podcast, we talk about all things abundance. And it's worth repeating because, excitingly enough, we're getting all sorts of new listeners every week. But money is not our end goal here at the podcast and here in this community. Money is simply the vehicle to more time freedom, geographic freedom, more fulfillment, more contribution to our community, more ability to enjoy our hobbies, our family, invest in our relationships, make a difference in this world. But on these solo episodes, we talk about the money vehicle to help us get to these other more abundant destinations. So I am here, as you know, I am the founder and principal of Sylvis Capital. We are a real estate investing firm. So I want to update you all on what we're seeing in the commercial real estate market. I'm often asked, because as you know, that is one of my vehicles to the abundance that I'm looking for in my life. It's not the whole equation, but it is definitely a big piece. So I'm excited because a lot of people really think of commercial real estate as something that takes hundreds and hundreds of millions of dollars to have in order to participate in. And what we do here at Sylvis Capital is we invite folks to invest alongside of us for much, much smaller amounts. And some even use their retirement accounts to get exposure to hands-off income from commercial real estate. So this podcast is just going to be about education. We're going to do a little bit of a dive into what's going on in the commercial real estate space. We're going to make it fun. I promise it's not going to be dry. And just because I know a lot of folks hear what's going on in residential real estate, or maybe they're just so busy with their own lives, their successful careers, their families, their hobbies, all of those great things, that you all may not have the time and the energy or the expertise to dive in. So we are seeing some exciting turns of events in the commercial real estate space that I'm excited to update you. Let's see how many times I can say excited on this podcast, right? Um, we just had a closing ourselves. I'll tell you a little bit more about what we bought and why we bought it, because I do want to congratulate our investors. But I do want to start this off by letting you all know that we are starting to see some of the big boys and girls in this space, known as the institutional investors, that have a ton of money. They have a lot of experience. They are the movers and shakers in this market. They're jumping back into commercial real estate investing. So I want to tell you why. Let's explore together what might be causing that, what's changed, what's going on, so that you are empowered. None of this is advice. I can't make investment decisions for you. I don't give investment recommendations. I simply talk about what I do, what I'm thinking, and then also give you all education like some of these news articles we're going to go through together. Okay, so let's start off with what Goldman Sachs is doing. They have recently decided with their real estate fund to jump back in the market. So there was an article by BizNow who spoke to Jim Garman, the Goldman Sachs Asset Management Global Head of Real Estate. And he said that he thinks the commercial real estate market is bottoming out. So they've begun investing in the US for the past 3 or 4 months in housing, logistics, healthcare, and medical office. So why? What did he say? He said he'd looked at all the signs. They felt like we were getting close to the bottom and it's time to start investing. He specifically called out inflation leveling off, interest rates peaking, liquidity coming back to the market, meaning that, well, he didn't say specifically, but I am going to infer that he was talking about more folks transacting and also a larger availability of debt. As you know, most commercial real estate is purchased with debt. Private investors and opportunity funds jumping back in the market, and that historically is a sign that the market has bottomed out and is reaching recovery. So as sophisticated investors building our vehicle, our financial vehicle to help us on the road to the abundant life that we want to live, paying attention to what the smart money is doing and saying can be very helpful. Are they right 100% of the time? No, no one is. No one is. But there are signs. People do have track records. There are good indications of what others may be doing in the market and how we as savvy investors can take and learn from what they're doing and understand their thought process to benefit our own investment portfolio. So I will say this, I myself have not stopped buying over the past several years simply because I've been able to find commercial real estate deals that were priced wildly below market in very solid cities throughout the United States that were cash flow positive and had a lot of, as we call it in the industry, meat on the bone to renovate and do great things. But look, every part of the market cycle has its opportunities and it has its risks. So understanding where you are in the market cycle so you can decide what levers to pull, identify the risk to mitigate it, identify the opportunities to go ahead and take advantage of those. That's important. So if we look, let's pretend that the market cycle is a clock and the top of the market is 12 o'clock. The very bottom of the market is 6 o'clock. And then kind of sliding down from the top to the bottom is 3 o'clock. And then rising up from the bottom on the way to the top is 9. A lot of institutional capital and big heavy hitters in this industry feel that commercial real estate is around 6 o'clock, maybe 6:30, somewhere around there. And to me, that represents a massive opportunity to buy at a great cost basis and continue to build my portfolio. But we do have to ask as savvy investors, well, because not every city is the same, right? So, and not every asset class in commercial real estate is the same. I buy industrial, I buy multifamily. So getting more specific rather than the whole United States is helpful to me. But I know a lot of listeners of this podcast are interested in real estate, maybe have taken a few steps to invest, but still find it helpful to understand the big picture, right? So I want to bring that update to you all. Let's continue though, because CoStar which is the number one commercial real estate information company. They have been talking about in their most recent article, strong multifamily demand fundamentals and a slowdown in construction have sparked enthusiasm for the industry over the past quarter. So there's increase in transaction volume. So that's buying and selling. And the transaction volume also topped 23 billion in the second quarter, which is up 40% from the first quarter of 2024. So what does that mean? People are feeling more confident in buying and selling in the market. That's a data point. It doesn't tell the whole story, but that's a data point for us to consider if we're going to invest in commercial real estate, specifically multifamily. CoStar also went on to say that healthy tenant retention, new leases, and a strengthened conviction around the national housing shortage have driven buyers back into the market. So tenant retention, if you don't know, in the multifamily space, some of the largest expenses that a multifamily or apartment owner can incur is tenant turnover. So when someone leaves and you have to refresh the apartment, whatever that looks like, that can be very expensive. So being able to retain tenants, making sure folks stay, we call it heads in beds or stay put, can be a very positive sign that folks aren't, for example, leaving because they lost their job, they can no longer afford your apartment, and they're going to downgrade to something cheaper. Just one of many scenarios as to why tenant retention could be better. But the bottom line is, for apartment owners like myself and my investors, seeing higher tenant retention is a good sign. And this is just stacking on the reasons why you're seeing more smart money come back into the real estate space at this time. Okay, so CB Richard Ellis, who I'm sure you recognize that name as well, has said that the U.S. multifamily market has likely turned a corner and has reached stabilization as improving fundamentals buoy market sentiment, which is exciting. So we're hearing this from several sources, right? So CBRE mentions that we expect transaction volume will remain healthy throughout the balance of the year. And multifamily vacancy rate has remained unchanged at 5.5% in the second quarter of 2024, which is really exciting because, as you can imagine, vacancy rate, if it's too high, it makes it very difficult for investors to make money and for us as owner operators to be able to pay the basic expenses, right? The mortgage, the debt, the insurance, the taxes, the repairs and maintenance, all of that. So the higher the national occupancy, the better. Of course, this varies dramatically market by market, right? Geography by geography. Los Angeles isn't going to be the same as Dallas. It's not going to be the same as Detroit. It's not going to be the same as Denver. But overall, looking at the overall health of the market, which a lot of these big boys and girls take a look at when they decide to come back into the market, that's a data point to consider. And the U.S. vacancy rate declined during the second quarter for the first time since 2021, which is really exciting. And here's another data point I think you'll find interesting. It's this concept of absorption. So we are seeing quite a bit of construction or new housing, apartment housing built throughout the United States. Again, it varies market by market. So what does that mean? Why should we pay attention to that? Well, what if we're building a whole bunch of new apartment buildings and no one's moving in? That's a problem, right? We have to maybe discount the rent to encourage people to move in. And that doesn't just impact the apartments being discounted, that's going to spread throughout the market. So we don't want negative absorption. We want high absorption, meaning these are heads in beds. These are people moving in and staying and creating and taking out leases on apartment units. So high absorption, good sign for investors and for a real estate market. Absorption grew nearly 140,000 units during the second quarter of 2024. This is according to CBRE, the fourth highest rate since the year 2000. This figure was surpassed only by the first three quarters of 2021. And through the first half of 2024, absorption matched all of 2023's demand. This is big, y'all. You think of supply and demand, basic economics. This indicates high demand for apartments in the United States. So are you seeing the stack here? Are you seeing the data points? You're seeing how we're data driven when we examine, are we investing as savvy investors? Is this a good time? And where are we in the market cycle? There's a lot of very positive data, in my opinion. Again, not financial advice for you. I'm not telling you how to invest or what to invest in, but for myself as a data-driven investor who has quite a bit of experience in real estate investing, this is what I take a look at. This is the information we look at. Of course, we look at this on a market level as well, but it's important to understand what the average renter is going through in the United States, right? It's still very expensive to buy a house in many markets. Interest rates are high. It's the millennials who are still in peak household formation. Some of them have the opportunity to buy, but they'd rather rent. They want the flexibility. They saw what their parents went through with maybe being tied down with a mortgage, how expensive it can be to maintain a home. So we have this whole renter by choice cohort as well with the younger folks in the United States. So this is all driving demand for apartments, which is really exciting as an apartment investor. And having the fourth highest demand or absorption since the year 2000 says a lot about what's going on in this industry to me. And we are still short over 4 million housing units in the United States. This is of the housing units we have, whether apartments, whether mobile homes, whether just single family houses versus population projections. We're falling short 4 million. So there's still quite a bit of an imbalance between demand and supply, which is also favorable as a real estate investor. So I hope all of this is a very data-driven, hopefully not too dry podcast episode, but I really want to equip you with some data points that I take a look at that you could also use as you decide what to invest in, how to invest, where to invest. Again, not because money is the end all be all, not because money is our life's purpose and goal, but creating hands-off income can be a powerful vehicle to help us spend our time as we wish, have more time to travel, enjoy our family, build relationships, give back to our community, have our cup overflow where we're able to give and live well, but also give our excess and our overflow to those who need it. All of those amazing things. I have found real estate to be incredibly effective in that realm, but there are plenty of other ways you can also generate hands-off income. But the more that you study different asset classes, the more well-informed you are to be able to pick and choose what works best for your goals and your lifestyle, right? So I'm going to end this episode by congratulating 98 investors who invested alongside of us in our latest apartment complex in the great market of Dallas, Texas. Last Thursday, we actually closed a 144-unit all townhome opportunity, which is so exciting. Townhomes are not easy to come by, but are incredibly high demand, especially in the Dallas market. So these had all attached garages, washer, dryer hookups. I mean, just everything great renters are looking for. And so we want to congratulate our 98 investors investing alongside of us. The Dallas-Fort Worth market continues to be very strong, very economically diverse, which makes us feel really confident about our our tenants' ability to pay their rent. And this property also offered some exciting tax benefits for 2024, and of course, great diversification for our investors' portfolio. Most of these units had not been renovated since the 80s or 90s. So we're going to be renovating those. And our purchase price was $22.75 million. And through renovating, we're going to add over $11 million in value to this property over the next 5 years, which is really exciting. So our investors benefit from that value creation, the cash flow over the 5-year hold as well, which is really exciting. And just the multiple layers of how we all make money through commercial real estate investing. I hope this episode was helpful for you all. Please let me know in the comments if you're interested in hearing kind of more of how we think about things on the investing side. I hear from some folks that this is interesting, but I want to know. I want to hear your feedback. So leave a comment if you're on YouTube, if you're on iTunes, if you're on Spotify. Would love to hear your feedback if you're interested in hearing more of kind of this technical side of investing. I'm here to add value to you all. I get such great feedback consistently about how much you all love this podcast. And I thank you from the bottom of my heart. It is so enjoyable to be able to invite folks into this world, whether it's talking to the great guests that we have or talking more about financial abundance on our solo episodes. It's such a rewarding adventure to go on with you all. If you are as excited as we are as what's going on in the commercial real estate space, I'd like to invite you to reach out to us to have a conversation about investing in a hands-off way in commercial real estate to get all of the benefits of real estate investing without the hassles of tenants, termites, and toilets. I'd like to invite you to go to sylviscapital.com and click on Contact Us, and we'd be happy to have a conversation. Have a wonderfully abundant week, y'all. We're heading out to Vegas here in just a few days. If you're a USC fan, fight on and beat the Tigers. If you're not, that's okay. You can still cheer on our Trojans for our season opener as well in Vegas. It's going to be a lot of fun. College football's back, baby. Have a great week, y'all. Talk to you soon. Bye for now.
Thank you for joining us on another episode of the Secrets to Abundant Living podcast. We hope you found inspiration and valuable insights that will empower you on your journey towards abundance. If you enjoyed today's episode, don't forget to subscribe, rate, and leave a review. Your feedback means the world to us, and it helps others discover the secrets to an abundant life too. Stay connected with us on LinkedIn, Amy Sylvis. Keep striving for your goals, nurturing your relationships, and embracing the adventure that is life. Until next time, we wish you an abundantly fulfilling day.